So we're just connecting here, about to do our recap for the day, and we'll see how this current trade here develops. Just connected here. So as we can see, still in negative territory. We've got Tesla earnings coming out, down 45 points. Just going to trail to the stop right there. This is can't be changed. Okay. I didn't try to change all the quantity. Can't be less than one affected. Huh? What the hell's going on here? Very odd. Very, very odd. Let's see.
Order canceled.
Cancel that order. Sell click. No. It's a buy click. It's a buy stop. And put it at 19.
Order submitted.
So should be doing a recap here, but we're just closing off this trade here. We've got Tesla earnings coming out at the bell. Prices could of course come up and stop us out. But of course if Tesla earnings are negative, should be alright for us. So we were in 53. An exit of 19. Let's see what it is. 19.
Order filled.
66 points. So we just realized that loss there. As prices came back. Realize that loss of 66 points there.
Order canceled.
Cancel that order. So, with that said, that's that trade there complete, and it was a pretty bad trade. So, let's start this recap. So we started the day okay. We started the day pretty alright actually. We started trading during Europe. So we started trading during Europe here. Took a trade long, suffered through some pullback, got our take profit, went long again, exited by mistake, got back in, took profits. Decided to come back, so we're up 18 points at that point. We're up plus 18 on the day after the European session. So we came into the US session again, went long, took profits after took 11 points. Prices came back, went long again, and we took profit as we came in towards the 530s here. So we were up at one point, we were up just about 117 points we were up. Now this is where the problem started, just around this area here. So we were looking for prices to break. The thing that actually worked in our favor, actually I should mention that we were long, and after we were in, the PMI news came out, and that actually went in our favor. So we took profit, re-entered as prices pulled back, took profit again. But this is where our issues came about. Prices were rejecting and consolidating below this level. What I wanted to see was a move above, then a support being found at 31 for me to go long, but I had a strong move to the upside. The RSI, was above 78. It was about 80. So I used that as a justification not to get in, and as we can see, prices continue to the upside up towards that 88.50. This candle here was a high volume candle. I thought with it going into this 88.50 with a high volume, I'd go short, so I went short. As I was adjusting my order, I accidentally attached the order to, I think it was an indicator of some kind, and it took me out of a trade, and that really frustrated me, because I was looking to trade the market short down to the open here of so we've got Tesla's earnings coming out. That's the volatility we're seeing, and so got out. It was profit, but I got out. Prices pulled back, went long. Here I was just in an order again, got out, and what happened was, so I made some mistakes through here. I wanted to take profit there, but I took profit a bit early. Put an order in, market came down. So when this candle was closing, I noticed that we broke the highs by a couple of ticks, and then we had this big candle, pretty much an engulfing candle. So I thought, well, prices would come down towards, back down to this consolidation is 531. So I reversed the position that was long, reversed it to a short, immediately got bought back up off the standard deviation band here, and I should have thought about taking the trade off, but I decided to hold, especially after I've suffered this loss, which took me from 117 down to 93 points on the day. I decided to hold that position. Now, of course, prices didn't come back at all, so prices went up, made new highs, came back, was about 8 points from my entry. Thought about taking it off, but decided to hold. Thought prices would eventually come back down, and from there prices only continued to the upside. So pretty much every dip was being bought on this market. Nearly every single dip was being bought on this market, and it was to my great frustration. What was happening, prices continued higher, above into the 50s. Actually thought I'd be stopped out into the 700s, but fortunately, at the end of the day here, prices did come back a little bit, and trailed to the high of this 5-minute candle, and prices turned around and stopped me out, so making me lose 66 points on that stop out from the short down here. So this short was actually taken at 11. Let's get our US clock up. That short was actually taken at 11 a.m. Sorry, 11, just after 11 a.m. Eastern Standard Time, so by 11:05 to 11:10 area. That's where that short was taken. Again, the 11 a.m. period is a very difficult period for me, and I let this big 60-point candle shake me out of what was going to be a good day. It was up 117 points. The bias clearly was to the upside, but it's my own fault. I let recency bias come in, tried to be a bit too smart again, tried to predict the market ahead of time. All the indicators I use was pointing to being long, so we're above the 50 period moving average, we're above VWAP, VIX was saying buy, so everything was pointing buy, and I let this big candle, this big bearish candle here, which I thought was an engulfing candle, I let this candle dictate and change my entire plan for the day, the entire trade idea and plan for the day. I let this candle change it. Also, when I was in some of the earlier trades, there was a thought about holding for a full daily ATR, which was about 339 points, which would have took us up to 1620, 621. As we can see, prices did eventually get towards that level. So being here at the charts actually resulted in results, actually caused me to have results which at other times I would not have, because before, when I'm not able to be at the charts, I would simply buy or sell, come back at the close of play, and whatever happens, happens. Now, if I would have allowed that to happen today, would have been very successful. Also yesterday as well, if I would have stayed away from the charts. But here I am taking trades, getting in and out, taking smaller wins, when in reality, getting in and holding all the way up to the level, coming back at the close of play would have actually been a lot better for me. Would have definitely not resulted in me taking this in an ill-advised short here. That's proved very costly, losing. And the other trade was the reversal. So we lost 66 points on this short that we just closed recently. And when we reversed this long position, because of this short candle, we lost a further 24 points. So we lost over 80 points there. 66, that's 86, about 90 points. We've lost 90 points right there, just off being here at the charts and taking these trades, not allowing the trades and the market to play out. Now, the positive we can take from it is, of course, that the triple confluence of the moving average, VWAP, and VIX is definitely showing very strong, powerful signals. But disappointed that in the past 2 days that I've removed a lot of profit off the table, especially today being up 117 points, not being able to push through, getting up to like 150, 160 points, simply because just here, just this one big bearish candle caused me to think prices would head down to that 31. It didn't happen, and I stuck with it. Now, if I would have got out, there were so many opportunities to go long because the dips were being bought. Prices came down to this swing low, as we can see here, was bought all the way up. So there were plenty of opportunities to buy. The VIX was supporting us as well. VIX, let's see, VIX was to the downside, down 7%, pretty much after, will that be 1:30 Eastern Standard Time, so just over here. We've got VIX heading below 5%, so just through here, VIX was showing strength. I also noticed I think I was at charts here. Thought about getting out of position, did not. Of course, prices continued here to the upside, further 67 points. So definitely could have mitigated some of the losses, but that was the nature of what I did today. So we'll bring over the trade performance, and we'll generate, and as we can see, this is how the day started with our trade performance. We had the market go in our favor. At our peak we were at 117, almost 118, and this is where we're going to end the day at 27. So I'll just take a screenshot of that, of the 27. If we have a look here at the half an hour, again, that 11 a.m. period, our worst period, we lost 90 points right there. We picked up 90 points during the open, and we lost 90 points at 11. So 11 period, these are our European trades, actually working out for us. But that 11 a.m. period proving itself problematic. The summary page, well, we had a positive day, 1.31 profit factor, should be a lot higher than that. Percentage profitable, 86%. Again, could be a lot higher than that as well. Average win, because of those small wins, our average win is pretty small, and because of that huge loss, you can see here our average loss is 5 times the size of our average win, only mitigated by the win percentage. So that's not good metrics. Those metrics aren't great. Largest win being 10, largest loss being 60. So that's like 1 to 6. Not great. Not great at all. Average time in the market 26 minutes. I suppose that's a little bit better, but I think that big loss played a huge part in bringing up the average to 26. So those are pretty much what that's pretty much what we're looking at here on this market. So we'll see, there we are, there are the trades. So there's our wins, and there's a huge loss there we took at the close here. Huge loss, 60 points. So there's definitely there's still some work to do. I still need to definitely trust the strategy a lot more. Stop using filler words. Should definitely trust the strategy a lot more than I have, especially after we've seen price. We were able to pick up 117. Very nice equity curve. So definitely after having that 24-point pullback, should have been quicker to close. Maybe should have been quicker to close that trade, but I definitely shouldn't have been heading in a short direction, because the triple confluence definitely was not in support of it. The triple confluence of the EMA, VWAP, and VIX should have paid more attention to that, trusted it a lot more, especially after we didn't see that follow through from this engulfing candle. No follow through. This bullish candle broke the highs. Should have definitely thought to get out, especially as this candle and this move was against the overall trend, supported by VIX, moving averages, and also the PMI news that came out. Also on a daily chart, it was looking for a bullish move, because we had this sell-off in the Middle East tensions, had this bullish candle, gapped up, didn't retest the lows, closed bullish. So definitely after that, showing the end to the Middle East tensions, definitely expected some follow through to the upside. Couldn't foresee prices heading as high as it did, and my short was actually around that 53.50, around these previous highs, but price didn't come back and test that level. So we had this strong push up here, very decent range here on the NQ. And the range for the day, looking at 374.75 points. And I think that's it. I think we covered everything. So even though we picked up 27 points, we removed a lot of profit off the table. And with that said, thanks for watching.